And we're also standing by for some econ data out this morning. We're going to get core PCE and we're going to get personal spending and income. All of that comes out 8:30 a.m. Eastern time, about 2.5 hours from now. And joining me now for the rest of the show, Cornerstone Wealth Chief Investment Officer Cliff Hodge. Actually, I'm going to keep you around for about 10 minutes, Cliff. My apologies, but I'm going to be keeping these two Wall Street all-stars for the next 3 hours. Wall Street Journal Assistant Editorial Page Editor James Freeman and Florida Bankers Association CEO Alex Sanchez. Good morning to all of you. Cliff, I want to start with you on, there's two dichotomies happening for the markets right now. You've obviously got what's happening in Washington and all this back and forth on the social spending package, which many are worried is going to really blow out inflation and make things even worse across the country. Then you've also got this backdrop of corporate earnings who are telling us, a lot of them, that they're going to take on the cost that they've incurred and they're going to pass it along to the consumer. And the markets, they're definitely starting to get reactionary to both lines of thinking here and both walls of worry, if you will.
Good morning. Yeah, absolutely. So investors currently face a juxtaposition of more short-term bullish dynamics. You mentioned earnings. We've had some strong earnings beats, earnings growth year over year up about 34%. So looking good there so far. We have positive seasonality with October through December typically being the strongest 3-month period of the year. And then we have an unleashing of corporate buybacks, or we will here very soon, with to the tune of nearly $230 billion concentrated in November and December. So short-term dynamics look great, but then longer term, you mentioned inflation. We are watching the Fed. We expect taper to be announced here at the FOMC meeting next week. Supply chain issues, as you called out, with Apple and Amazon, highlighting those. So interesting times, no doubt.
Well, and Apple, I think, was really the big surprise, because going into the earnings last night, a lot of the analysts were saying that of all the companies in the world, of all the global powerhouses, Apple is the company that can survive and manage the supply chain crunch because they are Apple. And they didn't. The opposite happened. They came out and told the street, look, we've got issues, and it's affecting your iPhone 13. It's going to be affecting your new earbuds. Your reaction?
So the earnings calls and the warnings from both Apple and Amazon yesterday afternoon are a wake-up call, really, on how disruptive these supply chain issues can be. And as you mentioned, these are the most powerful, largest, and well-run businesses on the planet. And if they're having these kinds of issues, how do you think the rest of corporate America is faring? Not to mention Main Street. So certainly some challenges. Now, we do think they will alleviate over time, but the key is it is going to take some time.
No, it really is. And as far as what's happening in Washington, and you kind of touched on this a moment ago, you've got the Biden administration proposing a 1% stock buyback tax to help fund its spending plans, going after corporate America again. Stock buybacks have been surging this year. S&P 500 buybacks expected to hit a new record in the third quarter. Your take on the impact that the Biden stock buyback tax would have? Because, and Maria's been talking about this, Cliff, to be clear. She was talking about it yesterday. How are you going to pay for this? Well, here you go. Here's one big example.
Well, it still has to get through Congress and then approved. So we'll see ultimately what the final package looks like. But there's no question that a surcharge of 1% or whatever the final number is going to be on buybacks could be a game changer for the market. I mean, the corporate bid has been really the one constant over the past few years. The forecasts from Goldman Sachs are for $900 billion roughly in buybacks in 2021. Yeah. And so by introducing a tax, that introduces a much higher hurdle rate and could dampen the corporate bid, which would obviously be negative for markets.
Yeah. And Cliff, obviously, all of this in the wake of these companies, many of them that kept the country going during the pandemic. And now they're being penalized by the Biden administration. We're going to talk more about it later in the hour. Cliff Hodge, great to see you, Cliff. Thank you.